Joining me now is Dan Levy, Senior Autos Analyst at Barclays. It's good to see you, Dan. Welcome.
Great. Thanks for having me, Kelly.
So let's start. These are always tricky when it's, near-term challenges, but you raise a price target, long-term opportunity. How do you thread the needle on this one?
Yeah, listen, we've been bullish on Tesla. We see them as a long-term winner in the industry's transition to an EV world. We acknowledge that there's more to Tesla than just the automotive story. And even from a more, call it midterm catalyst path, you have Model 2, the push to mass scale coming late 2024. But I think the view on the stock was that there is still a more challenging near-term fundamental setup as far as finding the floor and margins. Inventories for Model 3 are still somewhat elevated. There is still some concern that you're going to have further price cuts. And with the run in the stock, we thought that the stock was dismissing some of those fundamentals, hence the move to the sidelines.
Is there a glut of Teslas right now?
There is certainly, based on some of the data that we've seen, there is elevated inventory, especially for Model 3. I think the concern is that you have on top of this capacity ramping at some of their other facilities, Austin and Berlin, and that as more of this capacity comes online and you've seen competition from other automakers, this could spur further discounts and price cuts from Tesla.
Right, exactly. So the shares are down 5% today. Do you think they can hang on to the doubling that they've seen year to date?
Our view on the stock going forward is we fully recognize that there are other non-automotive components to the story. We appreciate that the stock is getting a bit of an AI bid. And, the opportunity near term is that you may potentially see a bottoming of margins on the second quarter. We think that as far as deliveries go, you're going to get the deliveries release in the next week and a half. We're actually somewhat ahead of consensus on that. But again, I think that, it's important to be mindful of the fundamental setup, especially as it relates to margins.
Yeah, and what about the valuation, 75 times forward earnings or something like that? You're raising your price target to 260 above levels from here. What are you valuing the shares on?
Yeah, our valuation is based on our long-term 2030 outlook. We think that by then Tesla can be comfortably north of 6 million units. That makes them the number, call it 5 or 6 automaker globally. We have them holding some margins. And then what we're trying to do is embed some upside optionality in there. So we feel that the valuation is mindful of, the path that they're going toward with some upside optionality as well, which we think is quite necessary. But at the same time, if you look at the trading multiple, this was a stock that was trading at just under 30 times EV to EBITDA as recently as late April. A lot of the feedback we got was that the 1Q earnings call was quite negative. And in the span of the last 6-7 weeks, it's gone to well over 40 times EBITDA, really off of sentiment with little in the way of change fundamentals. This is actually a sharp contrast to some of the other AI names we've seen, like NVIDIA, where you've actually seen multiple re-rating alongside positive earnings revisions.
Right, exactly, and that's a great point. You mentioned that AI has been, to some extent, a driver of the stock, but there seems to be a lot more risk around Tesla's use of it, specifically its full self-driving capabilities, where it seems like marketplace demand is not that strong right now, based on some of the prices of used Teslas that come with that equipment, where they're really not getting much of a valuation boost from it. The consumer may not be valuing, and more importantly, regulators may clamp down. They actually have had a pretty hands-off approach so far, but as we've seen with crypto, that might not last forever.
Yeah, the approach on FSD is actually quite different from what we've seen other automakers taking. Tesla takes essentially a brain and eyes approach. There's a lot of cameras, and then there's a computer that's doing all this. So it's a very vision-based approach. Other automakers are trying to use other sensors and then the push to completely full self-driving. You've seen other automakers using other sensors such as LiDAR, embracing radar, and also using maps. So it's a very different approach. We've characterized the Tesla outcome as binary. It could be a spectacular success, but it's also not very clear that it could be successful, especially as it really is a contrast to the other automakers. Near term, the uptake rates on FSD have been maybe somewhat more limited. It's more of a U.S. story. And if you look at actually some of the third-party data stacking up Tesla's system against others, there are different reviews on where Tesla's system stands. They do have clearly an advantage. They have a lot of data out there. They have a large fleet of vehicles. But the technical approach, it's still unclear if they're the long-term winner on this.